part-time or a long-term casual. So that means that you had to be on employed on a regular basis for 12 months as of the 1st of March 2020. That's for the long-term casuals. You have to be 16 years of age. You need to be an Australian citizen, and there are other categories of people that get it, permanent visas, etc., etc. You can read those categories there. And you have to be not in receipt of a job keeper payment from another employer. So you can only claim it from one employer. How will the support be provided? So the first thing you need to do is you need to register with the ATO. If you just type into your Google search ATO JobKeeper registration, it'll pop up. It's quite simple. You just put in your ABN, the name that your business is registered under, your name or the name of the individual who's going to be the contact person, and the email address, phone number. That is not an application. It's not actually you saying I'm going to get this money. It's just your intent that you expect to be eligible for it. So I would say get in there, register if you think your income is going to be down by 30%. The ATO will contact you for further information, and then at that point you will be eligible or not, and you will then get the money for your employees. The ATO will provide with regular updates and advise you when you can lodge your application. So to assess the turnover, that minus 30% of turnover, what you need to do is keep accurate records of your revenue from last year and this year to date. Ensure you keep accurate record of the revenue from now onwards. What you'll do is compare the revenue from the month or quarter ending the 31st of March 2019 with the revenue for the month of this or quarter ending this 31st of March to make a high-level assessment of whether this measure is likely to be available to you. If you measure the decline in your revenue is 30%, you'll be eligible in March. The thing is, if you're not eligible in March, you may become eligible in another month because this is going to go on for 6 months. How will the support be provided? So the next thing you need to do after that is you need to identify the eligible employees that you've got. So you need to go through your list of employees as at the eligible date, and you need to see were they full-time, were they part-time, or have they been employed with you for longer than 12 months if they're casual. And then you'll need to provide this information to the ATO and keep that information up to date each month. The ATO will also use the single touch payroll to populate the information in most cases. The thing about it too is you need to get in writing from your employee that they are asking you to be their primary employer, because only that primary employer will be the person who will receive the job keeper for that employee. You need to then pay the eligible employees at least $1,500 per fortnight before tax. If an employee normally receives $1,500 or more per fortnight before tax, the employee will continue to receive their regular income. So they'll continue to receive their regular wages, and then you will just receive that supplemented amount. You must pay the superannuation guarantee on normal wages and salary that you pay to the employees. However, if the employee normally receives less than $1,500 per fortnight before tax, the employer can decide whether to pay superannuation on the additional amount that is to be paid as a result of the JobKeeper payment. So that was a lot to take in there. I don't know how everybody's going, but what I think we'll do right now is we'll jump into an example, because I think that always makes it easier to kind of comprehend what is going on. So we have an example here. This guy called Adam, he has a real estate business. He has 2 employees. His revenue has gone down by 30% in the coming months. He registers with the ATO. His 2 employees, he has Anne, who's full-time. She receives $3,000 per fortnight, and Nick, who's part-time, and he receives $1,000 per fortnight. So after Adam registers his interest in the JobKeeper, he applies to the ATO, providing the details of his eligible employees. He also advises Nick and Anne that he's nominated them as eligible employees to receive payment. Adam will provide the information to the ATO on a monthly basis with regards to his revenue. And he will receive this payment monthly in arrears. So once Adam's business is eligible to receive the JobKeeper payment, he's assessed to be eligible, what will happen? He'll pay Anne her $3,000 per fortnight, which is her normal salary. Then he will receive $1,500 per fortnight from the JobKeeper payment, and he will continue to pay superannuation on Anne's full salary. However, in the case of Nick, who's receiving less than the $1,500 per fortnight, he will continue to get his $1,000 per fortnight as salary, but the extra $500 will still be paid to Nick, even though it's above his amount of wages. So he will be receiving $1,500. Adam will receive $1,500 from the ATO. So the decision to be made here, though, is will Adam does not have to pay superannuation on the difference between his normal wages and the $1,500 that he's paying to Adam. He has to pay he has to pay super on the $1,000. He can choose to pay the super on the additional $500. So that pretty much covers JobKeeper. Do we want to see if there's any questions specific to JobKeeper at this stage, or will I keep going? If anybody wants me to
sorry, Joanna, there's a couple questions on the chat as well. Yeah, and also, are the slides moving? Because I haven't seen the slides move.
You're not seeing the slides? Because I'm
no.
Oh dear me, that's not useful.
There we are. I can see a slide now. Yep, perfect.
Oh my goodness, you all haven't seen all of those slides?
Sorry, Joanna, I didn't want to interrupt you.
All right, well anyway, you've heard me on all of those. I can share those with you afterwards. If you can...
Joanna, it's Carolyn. Just a question on the employment type and eligibility. If I've got an employee who's been employed on a part-time basis for less than 12 months, are they eligible?
Yes.
So the 12 months only relates to casual?
Correct. Anything else on the chat that's relevant to this JobKeeper element? Sophie?
Okay. Not at the moment, no.
Joanna?
Okay. Yes, hi Carmen.
Oh, how are you? Sorry I came in a bit late. So is it for full-time, part-time and casuals?
Absolutely, it's for all of those.
Great.
For casuals, they need to be employed with you for 12 months before.
Okay, great.
For any of them.
Yeah, perfect. That's good.
Yeah. All right, cool.
Sorry, my name is Erlina. I have just one question.
Yes.
It's just a query. If the person is currently claiming Centrelink payment, and is this person also eligible to register for JobKeeper payment?
My understanding is that you can get either the JobKeeper or you can get the Centrelink job seeker payment. It depends on what type of payment you're talking about, but my understanding is if it's the job seeker, you will either receive the JobKeeper or the job seeker.
Right, okay. So they can, all right, okay, understood. Thank you.
No worries.
Joanna, just another question if it's okay.
Yeah.
If I've got an employee who has been employed long-term at the organisation and was employed on the 1st of March, but they're then going on sort of extended leave as of the end of March, but still being paid while they're on leave, I'm assuming that would qualify as well?
My understanding is absolutely they would, yes. That they're on leave, they're still employed by you, they would be entitled to it. They're using their annual leave in that case, is that right?
Yes, correct. Yeah.
Yeah, they would also be eligible.
Thank you.
Even where businesses have closed down and forced closed down by the government, let's say, they will be eligible for this money. And then it would be up to the business, if it's within the fair work situation, to maybe redeploy them to do other types of work, such as maybe business development or whatever is whatever they can agree with, which is in line with the fair work. All right, guys. So I'm going to run to the next thing that we're going to cover because I already see that we've gone 15 minutes in. So the next thing I'm going to do is that I'm going to go through the cash flow boost. Are y'all seeing those slides moving now? Somebody tell me yes.
Yes, no worries.
All right, cool, thank you. All right, so we have the cash flow boost tax-free payment. Now this is really, this will apply from the 28th of April 2020. It's an amount of 20,000 to 100,000, which is going to be paid in 2 rounds, which is up to 50,000 per phase for businesses with an annual aggregated turnover of less than 50 million and that make certain payments to staff by the 30th of June 2020. To be eligible, you have to have an aggregated turnover of less than 50 million. You have to pay your staff between 1st of January and 30th of June. And you have to be a established business by the 12th of March. This one, you don't have to do anything. You just have to lodge your activity statements and you will automatically receive the amount back as a credit into your ATO account. All right, so let's go through a bit of detail. So who qualifies, how we calculate it, and some practical issues. You guys are seeing my slides. Okay, so it's aimed at employers to encourage retention of employees. What it's based on is the PAYG withholding amount. So if you have an employee and you withhold taxes from them, it's based on that amount that you withhold. It's going to be allocated in 2 phases, and there's a minimum amount of 20,000 and a maximum amount of 100,000. You must meet some basic conditions, and as I mentioned, 50 million aggregated turnover threshold to be eligible. So these are the things that are important, that you have to have an ABN, there has to be a history of business activity, you have to have less than 50 million aggregated annual turnover threshold. You must make some payments which are in the relevant period, which fall within the PAYG withholding rules. You must lodge your activity statements, and there are some integrity rules that relate. So we're going to go through these a little bit more detail. So the ABN is just that you have to have an ABN registered by the 12th of March 2020. Who can get it? Pretty much it's those who have employees. So a partnership could get it, a sole trader could get it, but it's not for themselves as a sole trader, it's for their employees. Sole traders can't employ themselves, partnerships in a partnership cannot be an employee of the partnership, and dividends and trust distributions are not subject to pay-as-you-go withholding.
Sorry, Joanna, just a quick question. Can you see the messages? We've just got a couple questions on the group chat.
No, tell me what they say. It's okay.
So we have Yvonne saying, what if they have paid leave booked already? Yvonne, if you don't mind, did you want to just ask Joanna that question?
So let me just think this through. You're paying them annual leave, and therefore the pay-as-you-go withholding will be applied to that leave. It will be fine. It will still form part of your business activity statement that you're lodging in March. Let's say you're a quarterly lodger, and therefore
the previous comment to Carolyn's question about what if somebody is off on long-term leave, will they be entitled to JobKeeper? So, you know, if somebody has booked long service leave ahead of time, for example, and it just happens to be now, do you think they'll still be able to claim JobKeeper?
I believe I did ask that question myself, and I think the answer came back as yes. My understanding is yes, but I'm pretty sure it's a yes.
Thank you.
No worries. When it comes under, but if you received reduced hours, are you eligible for any stimulus? Yeah, just answering Brad's question there. You will still get the, I assume that question there is in relation to the JobKeeper. Even if you have reduced hours, you'll still be eligible for the 1,500. Okay, so I'm going to jump back on here now to the cash flow boost question. So you must have an ABN by the 12th of March. Thanks for your questions, guys. I might wait till the end. If I get a chance, I'll answer them as we're going, but I may wait till the end to answer them because I may be answering questions as I go through which are relevant. So at the end, if you want to write down your questions and then just save them, I'm happy to answer them at the end. Okay, so either of the following must be met. So this is to prove that there's a business history. So you must have derived business income in the 2019 income year and lodged the 2019 tax return by the 12th of March 2020. And then you also, or you have to have made sales in a previous tax period starting on or after the 1st of July 2018 and ending before the 12th of March 2020, and lodged a relevant activity statement by the 12th of March 2020. So this one appears to be quite stringent, but the good news is that the Commissioner has the potential to extend deadlines for having lodged the 2019 return or an activity statement, generally when there's a lodgement deferral in place. So a specific example here would be like tax returns for 2019. If you're using a tax agent, wouldn't actually be due yet. You automatically would have received a deferral. You would automatically have received a deferral for that. So because you haven't lodged it yet will not mean that you won't get it. The Commissioner will say, okay, once you lodge it by the deferred date, you should still get it. What is not negotiable is this ABN. You've got to have an ABN by the 12th of March in order to be eligible for this, and you've actually got to pay the PAYG withholding amounts. You know, you have to have employees. Okay, so with regard to what classifies for pay as you go withholding, any salaries and wages, any director's fees, any payments to contractors subject to voluntary withholding, any ETPs, termination payments, any unused annual leave and long service leave, any certain compensation payments. So all of those would be classified as payments that you would be withholding on, and therefore they would then form part of what you lodge on your activity statement and thus get some of the refund on, the cash flow boost on. Okay, so there are these integrity rules, and these are super important because obviously people may be thinking, how can I maximize this? And the ATO is asking us all to be very fair in accessing this if it's relevant to you, but if it's not, then, you know, don't try and put yourself into any sort of schemes in order to access this stimulus. And they've not been very clear and given examples of what that would look like, but this is all they've said. Specific integrity rules have been introduced to prevent artificial or contrived arrangements or schemes being used to access the funding. Neither the entity nor any associated or agent of the entity has entered into or carried out a scheme or part of a scheme for the sole or dominant purpose of achieving any of the following: that they receive the cash boost, and also that they increase the amount that they receive from the cash boost. So what I would say in that case is that some of the things that you may hear that people are doing are high risk and some are low risk. And because the ATO has not made it 100% clear what can and can't be done, I would say these are the ones with low risk that it's okay for you to do if you're an employer, but you wouldn't want to get into the category of high risk area. So in low risk, you know, if you have a history, let's say you're a company and you are in the practice of paying close to the end of the year an amount dependent to yourself as an employee, because you kind of work out how much money the business has made, and then you do some tax planning and you pay yourself an amount. There's a history of doing that every year. I would say that's low risk if you then proceed to pay yourself an amount at the end of the year. If you then also ensure that it's documented and compliant, so if there's any, you know, obviously you're going to have to pay your super guarantee on those amounts, and you're going to make sure that you declare all of that money when you do your workers' comp, you know, that you're an employee of the business and you have your workers' comp in place. It's all fine. That's low risk. If you start to play in the area of there's no history of paying yourself any wages and salaries ever, maybe you've only ever taken drawings and all of a sudden you change the practice of paying yourself dividends to now paying yourself wages and salaries, that is very, I would say, high risk. If you do it as a one-off, let's say you just pay yourself in the month of March and then you don't pay yourself ever again, that's high risk. And then if you don't pay yourself any super guarantee. So that's that. Okay, so how's it going to work? This is the fun part. So the first phase, so as I said, there are two phases. The first phase is where the credit will be based on the amounts withheld from salary and wages, directors' fees, that you withhold. There's two types of lodgements mainly. There's the quarterly lodgers. So for those who are quarterly lodgers, anything that you lodge in March and June on your BAS, the ATO will give you 100% of the amount withheld. So that PAYG withholding, if it's $2,000, you'll get 100% of that. And I'll explain there's some more details there. But if you're a monthly lodger, you will get, in March, you'll get 300% of the PAYG that you've lodged. And then in April, May, and June, you'll get 100% of the amount you've lodged. Okay. So how does it work? Once you lodged your BAS or activity statement with the ATO, you inevitably will get a minimum amount of $10,000 for eligible entities when you lodge your March activity statement. This could even be relevant where you're paying amounts to workers and they are below the tax-free threshold. So you may have withheld no PAYG withholding from your employees. That's okay. Once you have employees and you put on your activity statement the salaries that you have paid to them, even if you withheld nothing, you will still get the $10,000. In this phase, the maximum amount is $50,000 that you can get per entity. Don't worry, I'm going to give you some examples. So if it's all very confusing, we're going to go through some examples. This is just to give you the high level understanding. So then there's a second phase, and the second phase is based on the amount that you got in the first phase. So for the quarterly lodgers, so people who lodge every 3 months, you will get 50% of whatever the first phase amount was, and you'll get that split between June and September. For monthly lodgers, you'll get 25% of the phase 1 amount, and you'll get that in June, July, August, and September. So in the second phase, the entity will still be entitled to the amount even if employees have been made redundant. No pay-as-you-go withholding amount in the later activity statement, or business has ceased trading. What you must do is you must lodge your GST return to activate the entitlement. And entities that lodge an annual GST return or are not registered for GST will receive the credit at the same time as quarterly lodgers. So let's go through an example. This should make it a little bit clearer. So in this case, we have a quarterly lodger who is eligible for the cash flow boost. So they have employees, they have an ABN, all those criteria are met. So in March, it withholds $9,000 of PAYG withholding, pay-as-you-go withholding. And then in June, it also withholds $9,000 pay-as-you-go withholding. So what happens? In March, when it lodges the BAS, it will get that $10,000 credit, which is the minimum that anyone who's eligible for the cash flow boost will receive. Then when it lodges its June BAS, the ATO will work out how much was the March BAS plus how much is the June BAS. Okay, 9 plus 9, 18. We've already given them 10. We're going to give them 8 now on the June BAS. So in total, they're going to get the 18,000, but it will be split 10 in March, 8 in June. Then what will happen is they will say 18,000 was paid in the first phase. This is a quarterly lodger. In the second phase, you're going to get 9,000, 50% of the 18,000, 9,000 on the June BAS and 9,000 on the September BAS. So what you'll see there is that actually what's happened is that in March, you've received the 10,000 and in June, you're going to get the second payment of the first phase and the first payment of the second phase. So you're going to get 17,000 in June, and then in September, you're going to get the 9,000. Okay, so here's example 2. This is again a quarterly lodger who's eligible for the cash flow boost. They have employees, but they don't have any pay-as-you-go withholding on the March or June BAS, but they have paid salaries and wages in the March quarter. So the minimum is 10,000 regardless how much PAYG you withheld. So on lodging the March BAS in the first phase, you'll get the $10,000. And then in the second phase, on lodging the June activity statement, even though you may have no wages, you may have no pay-as-you-go withholding, you still get $5,000, and in September you will get $5,000. Now, final example. And of course, each person's situation will be different, but hopefully these have sort of answered the basic ones. There's again a quarterly lodger. There's in March business activity statement, $40,000 PAYG withholding withheld. So what do? They get $40,000 on the March BAS. Then in June, when they lodge their BAS, there was $20,000 withheld. Because the maximum allowed in the first phase is $50,000, they will get $10,000 on the first phase in the BAS, but then they will get in the second phase 50% of the first phase amount, $50,000. So they get $25,000 in June of the second phase and $25,000 in September of the first phase. Okay, so that I'm not hearing my voice all the time, I'm just going to finish these few slides, and then if you have questions about the cash flow boost, I'll actually take them. Okay, so what else can I say about accessing the credit? You don't need to apply for it, just lodge your activity statement. The ATO states that no credit will be provided before the 28th of April, even if statement is lodged early. So you lodge your March BAS, even if you lodge it early, they are not going to give you the credit until the 28th of April. The credit generally will generally apply against liabilities arising from the same activity statement. So you could consider paying the net amount. So if you are paying, your GST plus your PAYG, you might work out how much you're going to get as a credit and just pay the net amount. Excess amounts will generally be refunded within 14 days of lodging after the 28th of April. Okay, so how is it going to be treated, that amount of cash flow boost? It's actually non-assessable, non-exempt income, which is the best kind of income to get, because it doesn't even affect it doesn't get taxed, it doesn't go on your tax return. So it's actually quite generous, this one. The business can still deduct pay-as-you-go withholding amounts. There's no direct tax impact on employees, and it's not subject to GST. All right, any questions? You can type them in, or you can unmute yourself and ask them. Okay, well, that must mean that I've answered all your questions, or you've fallen asleep. Is anybody sleeping? I love this stuff, but I'm not sure if you all are feeling the same way.
That was great, Joanna.
All right, guys. Is it all clear? Is everybody clear about what I'm saying? Carmen, what do you think?
Clear as mud? Is that the saying?
No, it was very clear. It was great. Yeah.
Okay, cool,
Really
cool.
good.
I can't see many of your faces, so I'm just making sure. If I was in
Joanna,
front
you
of you.
explained it really well.
Yeah,
Okay,
you
well,
are.
It was
And
really
I like
good.
the slides. I definitely want you to send them through when you can. That'd be great.
absolutely. Yeah, for sure, I will.
Yeah, the slides are great, Joanna. They really are.
Okay, cool. All right, well, I'll keep going then. You're not tired of my voice yet.
I love your voice.
There's
You
lots
never get tired of your voice.
There's so much to cover, guys. So sorry I'm going a bit fast, but my goodness, it's been coming fast and furious, this legislation. All right, so it's 2:30. We still got half an hour. Moving on. What will I tell you about next? How exciting. It's the instant asset write-off increased to $150,000. And also the accelerated depreciation deduction. But when this first came out, I think people were going, awesome, I'm going to go and buy myself a new expensive car and this sort of thing. And then I think everybody then started to go, oh my goodness, this is actually going to have a serious impact on the economy. And is there actually 150,000 sitting around to go and buy that asset, whatever it is? However, it is really generous. And to the extent that you have a business idea that could fly, and you've been waiting to invest into it, it's an ideal opportunity. Here's the government saying you can spend 150,000 and we're going to give you the opportunity to write it off right away this year. I'm not going to go into too much detail on it at the moment, but I will just run through it. specific questions related, it would be as relevant to this target market as but there is information I've got. All right, so it is from the 12th of March 2020 to the 30th of June that you can buy an asset up to 150,000 and write it off right away. This applies that if you have an annual turnover of less than 500 million. It has to be used or installed by the, between the 12th of March and the 30th of June, and it will apply to your 2019-20 tax return lodgement. There's also then an accelerated depreciation deduction, which is where maybe the asset is valued at more than 150,000. So then you would write off the, you have an ability to deduct 50% of the cost of the asset plus normal depreciation deduction on the remaining cost amount in the year of purchase. So that's just, again, you're allowed to, usually you would have to depreciate it, but in this case, they're saying, no, you're going to get an extra 50% of that value this is for then next financial year, 2021. So the 150 will finish at the end of June, but they're giving you this accelerated depreciation up to June 2021. At the end, I'll send you information if you're interested. There's also this wage subsidy of 50% of an apprentice or trainee wage. This will only relate to some people, and one thing I'm waiting to find out of is, can you actually get the 50% apprentice and trainee wage and the job keeper? And that hasn't been made clear to us yet. As I said at the beginning of this, the job keeper legislation as of this morning still has not been legislated, so we don't have clarity around all of the implications of it. So, I mean, if we could get the 50% apprentice and trainee wage plus the job keeper, the employer will be way ahead, but we're just not sure if you can yet. So this one will apply from wages that you paid to your apprentice or trainee since the 1st of January to the 30th of September. So again, pretty generous. It's up to a maximum of 21,000 per apprentice, and that's 7,000 per quarter. You'd have to be a business with less than 20 employees. And you have to be paying that, you have to pay that employee from the 1st of March 2020. This will last, as I say, till the 30th of September. If you are interested to apply, as of today, you can register through the Australian Apprenticeship Support Network provider, and then they will arrange for you to receive this subsidy. I guess if this does apply to you, you may be interested to wait and see if you can get both. I think you're going to be able to, because this one is administered by, I think, the state, while the job keepers are, coming through the federal. So I believe you can access both of them, but you may want to just confirm that before you put in your application for this one. Okay, that's all I'm going to say on the wage subsidy for apprentices and trainees. This one is really not been probably getting as much airplay, but I think it's actually a really valuable one that many businesses could look at. So this is underwriting small business loans. So what the government's saying is that we want to support small businesses at this time. It may be difficult for some of them to get loans from banks. So what we're going to do is we're going to guarantee 50% of the value of the loan up to $250,000 per borrower. So what this should allow, and it's therefore then going to be an unsecured loan, and you can use it for working capital. So again, could be something, you have a business idea, you've been waiting to develop it, or you have a business in place and you're really wanting to develop it over the next short term, but you don't have money. The government's saying it ultimately will be left to the banks to decide if it is a business that is sustainable into the future, and they will make their assessment based on the information you provide. But to the extent that the banks approve it, the government is going to give 50% security to the bank for that loan, and therefore you need to provide no security of your own. Okay, so of course it needs to be a turnover of less than 50 million. The guarantee will apply to loans with the following terms. So it has to be a maximum of 250 per borrower, and it has to be a maximum of 3 years, the loan period, but there's an initial 6-month repayment holiday. The last point there, the loans will be in the form of unsecured finance, meaning that borrowers will not have to provide an asset as security for the loan. The other thing about this is that it seems that they're going to implement it more in like a line of credit, meaning that you will not pay any interest unless you draw down the money. So you can apply for it and it just sit there as a money available for you to use. You will pay no interest on it until you actually use it. So especially for businesses who feel their cash flow is a bit hairy, they can apply for it. The bank will approve it. It can just sit there as a maybe I'll need it, maybe I won't, but it will give you some peace of mind that you're not going to run out of cash at these times. Lenders, so a bit more information, lenders will be encouraged to provide facilities for small to medium enterprises that only have to be drawn if needed by the SME. Should mean that the SME will only incur interest on the amount they're drawn, still have flexibility to draw down funds as needed. As I said, the final decision will rest with the lender, and this scheme will run from August 2020 to the 30th of September 2020. So I imagine many banks must be putting together loans that will match this criteria just as we speak, and soon enough they reach out to your bank. They may be willing to, they'll be ready to have chat to you about what's available. There's a temporary exemption for banks around the responsible lending obligations for providing credit to existing small business customers. So that should make it easier for you. And this applies for the next 6 months. The RBA is providing a funding facility to banks. So, 0.25% interest rates are so low at this time. So, that should really help us to get this money and be able to use it efficiently to perhaps grow our revenues if that's possible. Further incentives for new loans to provide to SMEs, and the banks are having a change to bank capital ratio requirement. So that will make it easier for them to make these loans. All right, that's that one about the small business loans. So pretty much that's the end of the business side of things. Does anybody have any questions now before I go into the individuals and superannuation?
Yes, please.
Go for it.
You mentioned earlier in regards to the apprentice and trainee 50% subsidy wages.
Yeah.
And I was thinking, if the employer is decided to employ one trainee, just say this employee is 16 years old, which is underage, do we need to follow the regulation from Fair Work Ombudsman, or just apply through the new regulation which is just coming?
I don't think that this will override I don't have the answer to that one. Is it Elena?
Yeah.
Yeah. I imagine that. Can you just tell me something? What is the Fair Work requirement there?
The Fair Work is actually the minimum pay rate for employee, because we currently have one client, and she's planning to apply for the wages subsidies. She's a clinic company, so eventually she's trying to get the subsidy, but we are trying to find all the information whether she's eligible or not to put the employee under training rate. So when I go to the Fair Work, it didn't tell that this beauty industry is eligible for the training. So I was just thinking whether to applying the subsidy, we need to follow all regulation from the Fair Work. Yeah.
I wouldn't be able to say for sure, but just thinking on the fly, I imagine the Fair Work will apply. You will still need to meet the wage, that is relevant for the apprentice or the trainee. But then what will happen is this 50% will come back to you as the employer. Is that what you mean?
Yeah.
Yeah. So yes, so you would, I think the apprentice or trainee needed to be on, yeah, they needed to be on at that date, the 12th of March, paid from the 1st of March. Once they were a trainee as at the 1st of March, you will be eligible for the 50%, but you would put them on as per normal, you're paying their normal Fair Work Award wages, or apprentice wage, and then the 50% will be reimbursed to the employer once you apply for this apprenticeship support network provider.
Right. Okay. All right.
Yeah.
Thank you.
Does that answer that question? Yeah. Cool.
Yeah.
All right. Any other questions? All right. So let's head to job seeker. Okay, we have 15 more minutes, which is perfect timing. We're not too much more, but this is all interesting. And as I said, there are other people on this phone call who know more than me. So if I'm going off track, I hope they will put me on the straight and narrow. But this is my understanding of the job seeker. This all relates to really Centrelink. And while I know a lot about it, some of the information from Centrelink is also quite complicated. So here we go. For individuals, this goes from the 25th of March to the 24th of September. It's relevant to that period. What they've done is there's an expanded access which reduced the asset test. So they're not looking at your assets at all. And they've also waived the waiting times for social service payments. So you can access the social service payments has been expanded to sole traders and contractors and those who have been stood down. Waiting times to access support has also been reduced. Asset testing has also been suspended. Income tests still apply. So this job seeker came out first, as many of you may be aware. Since then, the job keeper has come out, and I think this has reduced the need for the job seeker. As it's still obviously needed for some people who can't get the job keeper, but the job keeper in many cases will be more generous. And if you're eligible, your employer can apply for that. If you're not, you can go to the job seeker. You go to Centrelink, you register. And so who is eligible? Sole traders and self-employed casuals or contractors whose income has reduced. If you're a permanent employee and you're stood down and you're not receiving any other payment from your employer or insurer, as in annual leave or what you call it, not workers' comp, yeah, income protection or so on. Carers of people affected by coronavirus, and also just to note, it is subject to income testing. So the period, you would go to Centrelink to register for that. Oh, my slide is a little bit crazy there. What it meant to say was that you would register through Centrelink. So that one pretty much is, you get the normal job seeker amount dependent on your wages and your partner's wages will dictate how much of the job seeker you get. It's on average around, somewhere between 500 and 600 a fortnight, dependent if you have children or not, or if you have a partner, if you're single, and also your partner's income impacts. One thing they have done is that they have increased the potential for your partner's income. It used to be something like $994 per fortnight, at which point it started to reduce the amount of job seeker that you would get, but they've now increased that to almost $80,000 that your partner can receive without it affecting your job seeker payment. So that is about the job seeker. What they've also done though is to supplement the job seeker. They've also now given once you're eligible for the job seeker, a lot of other things come your way, such as rent assistance, family benefit tax, family tax benefit. Oh, did I get that right? So many words. So there's the one that they have put in is a 550 coronavirus supplement. So that means that you would get your normal job seeker, which would be around between 500 and 600 per fortnight. In addition to that, from the 27th of April, you'll also get 550 coronavirus supplement, and that's going to last for 6 months. It'll be paid fortnightly to certain social service recipients. Eligibility is those who are receiving eligible social service payments, and this will be automatic. So which means that it's almost doubling what you would have gotten fortnightly on the job seeker. And that will last for 6 months. Let's see, does anybody know everything seems fine? Okay, so then the last one I want to go through here is the early release of up to 10,000 in superannuation, and you can do that twice. So the first, that's going to apply from the 25th of March to the 24th of September 2020. So you can do one set before the 30th of June, and then you'll be able to do another set between the 30th of June and the 30th of September. What is it entail? So what you can do is you can get 10,000, each individual can get 10, who's financially distressed will be able to get 10,000 out of their superannuation in the 2020 financial year, and then another 10,000 in the 2021 financial year. These withdrawals are tax-free and will not affect your Centrelink or Veteran Affairs payments. So who's eligible? If you're unemployed, if you're eligible for certain social service payments, if you're redundant or you're made redundant or your working hours are reduced by 20%, or if you're a sole trader and your turnover is reduced by 20%. And how do you apply for it? You apply through MyGov from mid-April 2020. So how will it work? You have to be an eligible individual, and you can apply to access up to 10,000 of super. Sorry. 10,000 of super before the 1st of July, and this will be from mid-April. And then you can apply to access another 10,000 from the 1st of July to the 24th of September. And as I said, the amounts received will be tax-free and won't impact on the Centrelink or Veteran Affairs. Yeah, I mean, this one is pretty interesting to me because as someone who's trying to tax plan a bit, I automatically think there could be an opportunity if you actually are still earning significant wages, or your partner is, but yet you are affected for some reason to do this. You could actually, your partner could pay $10,000 into super, and then you could draw it out. And that way, if your partner is on 32.5% tax rate as their marginal tax rate, and they would get a $10,000 a deduction on their tax return because they've made a concessional contribution. Obviously, you'd need to make sure that they haven't exceeded the $25,000 annual concessional contribution cap. But then if you take it out of your fund, let's say, or if you have a self-managed super fund, then you would get that money tax-free to yourself. So there are planning opportunities there because they would then only pay 15% of it going in, but then save 32.5% on their tax return. So there's at least 1,500, 2,500, anywhere between 1,500 to 2,500 tax that could be saved on each of these 10,000 amounts. And if you're interested to look into that a little bit more, let me know and I can share with you about that. All right, so we only have a few more minutes. I'll just tell you what's available here. Sorry, I should say, does anybody have any questions? And then I'll just go to wrap up. Everybody seems, everything is clear as. So good, I'm happy about that. The first thing I'll say is thank you very much for attending. If you're interested, please leave your email address in the chat box. And what I'll do is I'll send you the COVID-19 stimulus and support measures, what you can access and how guide that I've got. And also I'll provide you with updates as and when more stimulus is released, because ultimately the government has said more stimulus will be coming. And I can share that information with you as it arrives for us. The last thing is, if you're interested, please contact me for a free 15-minute consult regarding your individual circumstances and how you maximize your slice of the stimulus package. And that is pretty much it. I'll be here for a few more minutes if anybody wants to ask me specific questions. You're very welcome, Jen. It's been a joy to have you. You're welcome, Elena. Cool. Definitely, I'll send it for you, Adriana. Thank you for all those who have attended. You're very welcome.
Thank you.
It's been great. Thanks, guys.
Thank you.
Thank you,
No worries.
Joanna.
You're very welcome. You're very welcome. Thanks for attending, everyone. Bye, phone. All right, so I'll get all of your email addresses from the chat, and I will send you the relevant information. You're welcome, everyone. It's been a joy to share the information. I'm here for you all.
Thank you, guys. All right, we're going to
Busy.
log off the chat. Thank you.
Can you